Good afternoon. Welcome to OptionsTender. It's Wednesday, November 12th, 2025. So we're taking a look at all the cash indices and the VIX as well. We'll see if there's anything that we can notice to give us kind of a trade plan going up into tonight. We have the government shutdown vote in the House of Representatives. And also in the morning, we have CPI. So one can lead you one direction, the other can lead you. So this doesn't mean that one or the other is necessarily going to be the end all be all for the direction of the rest of the week. Okay, so we have our options expected to move. We'll go over and we'll look at those patterns that we've been kind of doing day by day and see where this market might take us. Okay, so we're doing this intraday at about 3:10 p.m. Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube supporter. It comes with cheddar flow data. You got the dark pools and the options flow. We have great traders that are camaraderie in there. So don't just take it from my word. It's a community. It's not about what I show you on these videos or anything else, but I do think all those that are supporting. So let's jump into it. We have SPX on the daily time frame, and I love the cash indices here because they are much more clear. They're not disrupted by dividends or like the futures. They don't have contract rolls, and so I really like cash indices. So we're looking at this naked chart right now, and what we notice is that we had that blow off top here. We pulled back, and I know that there's a lot of people looking at this as a 1-2 type setup, or even a wave, an expanded wave 4, not an expanded, a running wave 4. Okay, and so that would mean that you have your A. Here's your top. You have your A, B, C, and you're off to the races. Either way, what I think we're going to look for is maybe some negativity going into the rest of the week, maybe close this gap and go from there or fail from there. I do think that we'll end up in some sort of equilibrium, and we'll have to see how that goes at the end of the week. But we've already hit the options expected move to the upper end, and I'll show you that on the 65. So let's go ahead and move on with the regular analysis. So far, our trend is up. And the big question is this a bear flag, right? A dead cat bounce, bear flag? Or is this a bull flag where you have your initial move, you're flagging, and you move higher? Doubt that's the case. I think at least a pullback into the moving averages or even closing the gap is more likely of a situation. But we've certainly seen with CPI, I've seen gap ups 2-3% when you think you're already overextended. So we'll have to see. I'll show you on NDX what kind of hedges that we're looking at as well. I think those were obvious hedges that really are going to matter. So here's your moving averages. We're pushing off that 8 EMA. The 20 is a trend. So momentum's up, trend is up. McClellan oscillator, let's put on our traditional look here. And notice that the oscillator is getting a little bit of breadth. We had that positive divergence there, and then we're moving up to positive breadth. But just know that this is, in my opinion, just a pump, just like any of these. Just like your wave, you had this B wave right here. It lasted a couple days, few days, and you got back up and couldn't hold. So that's what I'm looking for on this one. We shall see. Here's your RSI is a neutral. It's back to neutral. And our slow stoke is already up here to this higher end. So I'll be looking for this to roll over. And then we're still in a sell signal for the MACD. And now we're trying to press against and test that leader line. And I imagine this is just a back test, and we continue this rotation lower. I want to see this cycle all the way down to the lower end before we have any movement to the up. Now we're in bull territory, so the first things first is you got to get down past that zero line for any negativity to really start to accelerate. DMARC. And notice I have those arrows already up here, so it's not the DMARC. The yellow and the red are theirs. these are mine for head and shoulder type pattern. So we're at a 3 count, 10. There's no setup here. And that's kind of the game plan. If we do decide to break these lows, I'm looking for, at minimum, this confluence area right here. And then we'll be looking for left shoulder, head. And I don't believe this is the right shoulder. I still think we'll have probably a right shoulder here. Unless prices break these lows, continue lower, then that would obviously have to be shifted up here. Okay, let's go to SPY. Here's your traditional look with the channel there. Moved it to where a bunch of people moved theirs. And so now you'll need to break this low here. It coincides with the gap fill, okay? So whether it's tomorrow or Friday, I could certainly see price break down, close this gap, hold on. Maybe they close the week on it. Maybe we get a bounce off of it beforehand. And what's going to happen is we'll have this downtrend in place, and then we'll have this equilibrium. So clearly, if we break down from this channel at this point, I'm not sure if you can redraw another channel lower, but breaking down from this channel one more time is probably going to be it. And again, we have this confluence of support over in this zone right here. Okay, no need to look at really any divergences. Money flow still not flowing in there, still distribution. Your Bollinger Band, no setup. Let's move on. We have NDX. So there's your channel right there. The fake break. All right, I know that I can redraw this. I get it, but I'll leave it there for now. Nothing to see really there. RUT. There's that wedge, back test, breakdown, and so far just a dead cat bounce. Kind of looks the same. It looks a little bit weaker than the rest of the markets. DJX. This is something to look at because with this move here, it does appear that this was a wave 1 in hindsight. 2, 3, 4, and 5 right into the 2007 trend line resistance there. So if you put on in the monthly, you can see that you're pushing right up against it. And, you know, a close convincingly enough from up above there would be obviously bullish. But we're just at that line, kind of peeking over. We'll see where we close. We'll see what happens tomorrow. And here's the VIX. So with the VIX, the most important thing is to bring these moving averages, and we're holding on to the 17. That's that breakout point. Also making a higher low here with the 50-day moving average, and we're squeezing right in between that 8, 20, and the 50. So this will be obviously a decision maker. Now the 100 moving average was a really good indicator on the way down here. So obviously, if prices are going higher, then next is the 100. But if we are to get more bullish in the market, I don't think that the 100 moving average is going to be the holder. Obviously, we'll look for indicators and things like that. But I think if we start to break down from here, from 17, then we have likely a chance to go down to this trend line way back at 15 or so, going into early or late to mid November. We're talking the ideal low for this dominant cycle would be 1123. So I would imagine this continues lower if we get this government back open. And for all you members, you already know my thesis, my overall thesis. I don't think on the first vote with this deal that they would have an actual opening of the government, but we'll see. You know, I think they might end up crashing, quote unquote, crashing the market if they can't get this vote through tonight. And then CPI, who knows, will that add, fuel to the fire? we'll see what happens. But this is an important level. When we start to break this level, then I think 15 is more of the target at that point. And this is a trend line going way back, and it'll still give us a higher low, but it will be more of this type situation where you have a 3-wave move here into lows, and then we can move higher. Again, I'm not really in that camp, but we have to let price tell us what to do. I do think we're going to get some sort of possible hammer candle right here, or spinning top, whatever you want to call it, this inverse hammer, and that will be our reversal candle for continuation to the upside. And if that's the case, then we'll be looking for the gap close here, right into resistance, right at this 200-day moving average. And I don't think that will take it out the first time. If we do get a reversal candle going into the end of the week, a couple candles, I think we'll reject off of this 200 moving average. It'll keep us in limbo. We close on top of the 20 maybe, and then we'll look for continuation next week. I don't think that we're going to have too many sparks for the rest of the week. If we do, then fantastic. I'll take it. I want this thing to rip to new highs. Okay. But we have to let price tell us. I'm just giving you these so you can react to it. I'm giving you some different points of view. So here's the QQQ that I was talking about. So what we did with the Qs, we added call insurance here. Okay, never hurts, and that is for tomorrow and the next day, to close this gap up here at 630, about 632. And so with that protection, if this is what happens, then we'll have some nice calls. Going into Monday, I said it once, I'll say it again. I had no business being profitable from Friday to Monday's open there, because we thought we were going to get a back test and head lower from this point to complete this head, and then get our shoulder and back test to the channel and head lower. That wasn't the case, but those calls just really ripped to the upside, and that's why we do it. We don't always have to be right in order to make money, and you definitely want to manage your account so you don't lose too much money. The greater the gains when you're on the right track and controlling your losses is what the name of the game is. And so we have this gap right here that if we do have some positive news and we hold on to this 8 and 20, that gap will most likely close at that point. And going to the 65, I'll just go to the Qs. This is what I showed in the Discord. I said, hey guys, I changed the channel here just so you had those two lows connected and you have this low connected. So there's a good trend line validation with three points there. And here's what I gave on the Discord. I was saying, hey guys, just putting on some protection just in case. This has been 3 days. It doesn't need to consolidate in price. It already consolidated in time. So there's plenty of juice left to go straight up and close that gap right there. And SPY looks a little bit different. It looks like SPY needs to come back and then make a move. But with this price action here and the fact that we hit this options expected move on the upper edge is much more bullish. And even if we start to get a pullback and things end up being a lot more bearish, just know that I doubt that we'll close the week underneath here. So the only reason why that I mention this is if you're playing weekly options, you don't want Friday. You don't want maybe Fridays to close the gap, perhaps, or something in more near the money so you can take profits as you go. But if you're going to be, looking out for puts that are further out, I would put them next week, the week after, something else to engulf any shenanigans that come in here to where you're getting some sort of equilibrium before the week closes. Okay. All right, let's go to SPY. 65-minute. Here again is our look. And so we have our expanded move here, and I still don't, I'm not convinced Here's a wedge. We're breaking down and back testing, and we're just holding on to the options expected moves. Such important areas, and I give these out each and every week. So the for SPY, you get those for free with SPX, but for the second tier members, we give these options expected moves for all of these individual names, especially the big tech, all through these names. And if you're already a member, or if you do join and you want to get the options expected move for any individual name, just let me know in the Discord, and I'll add that to my list, and I'll post it for you each weekend so we can get that weekly options expected move. Okay, so here's our look. This is going to be much more important on the daily time frame. Not a whole lot of things changed, but clearly our trend is up. You saw our moving averages. Colonosally, I don't usually use this on a 65, but way overbought if that is the case. You saw that divergence here, that positive divergence. Maybe we'll start looking at that, see how that goes on the 65 as well. All right, so you have all of this negative divergence here. Making a new high, making lower highs in RSI. Same thing with the slow stoke. Negative divergence, and we're starting to kind of roll over. Let's see if we can get that rollover going into tomorrow, but this is holding on today, so I wouldn't suspect that the last half an hour of the day anything really happens. We don't have a crossover there yet, but it's certainly contradicting each other. The slow stochastic's much more sensitive, and it's starting to head lower while the MACD hasn't crossed over yet. So that's why I think that we're not getting any real movement at this point. DMARC. No setup. We have a 4 count so far. With that last 9 count, we did get a sell-off, and we certainly recovered from there. So we could end up with a 9.9 if we go higher. Money flow. We did get our overbought situation and a slight divergence right there with 2 of those candles. So if you had that candle high at the options expected move, then you had 2 more hours. The gap up the next day, and that gave you negative divergence, and we'll see if that plays out and cycles through just like the rest of them. Bollinger Band, no setup here. And that's all we got. So even, so if we have a 1, 2, 3, 4, 5 to end this off, we close this gap here. I like the Qs better. This is already so extended, and I think there's more juice left if things are going to get positive in the Qs. And so that's why I play that. I don't have any SPY calls. All right, so with this one, it appears that this one has a back test, and at maximum what we're thinking is maybe we close the gap going into Friday or so. But I'm just not so sure that we can reach. It's totally valid if you reach both ends. It's just not probable. As a matter of fact, even if I've seen the market move from one end and go almost all the way for the rest of the week, but not quite to the other end of the options expected move. So again, we don't want to play our puts, much further. To be conservative, I wouldn't have much out of the money to 675. I think that's a good probable play if things do reverse here. And then we have to see, so my game plan is to add on to some moves here. So we don't know what's going to happen overnight, but if we get a dip and we start to come down into the gap here, I would kind of look for some calls just to start hedging in the very near term. Okay, so that's our game plan. I give the game plan almost every single day for SPX and SPY for, again, individual stock members. And so we have price holding on to, there was resistance here at the golden pocket, and it does appear that we didn't touch, maybe by a few pennies, of the 786. Maybe we could tag up there, but so far what I'm looking for, and again, I'm looking towards this target area of 650, and there's two ways to look at this. I think that this one in the yellow, 1, 2, 3, and then you had an expanded flat here, ABC for 4 in the yellow. And then we're looking for wave 5 going down here. I think that would be the scenario if this level specifically holds here. You can call that an ABC. It doesn't really matter as well. But if you have and excuse me, guys, if you're new, the washing machine is on spin cycle behind this, behind my office here. It's right in the back of the office, so I can hear the cycle. So if it surpasses this zone, if it heads lower, we get a bounce and heads lower, I'm looking at this as being right here a 1 and still getting that flat, that expanded flat for 2. And now you're talking wave 3 gets a bounce here, but if price bounces and goes lower, now we're talking about a possible 5-wave move here. All right, and then we might be able to hit some of these targets that we've been looking for lower. All right, and that would satisfy more of a an impulse wave to the downside and such. So we'll see. We'll see when we get there. Once we get to this zone, if we even get to this zone, then we'll be certainly taking profit and hedging to the upside. All right. Anything else on the VIX? We can see that we're at support on the 65. You had 2 touches here and then you have a touch here, so I'm going to consider this a trend line. Now let's see if we hold this. If we hold this, maybe we close the gap and come back down and close the week somewhere in here, but not looking for much more of a push than that until the following week. So we'll see. All right, thanks for joining us here at OptionsTender. Don't forget to hit the like and subscribe, and we'll see you in the next video.